Alright, hi everybody. Today I want to talk about the stock of Meta, where I think it's ultimately very likely that the share price of Meta stock will hit $1,000. We'll discuss the most recent quarterly result. We'll discuss what Gene Munster had to say about Meta stock. We'll discuss some of the ambitions that Zuckerberg laid out in the conference call and much more. So without further ado, let's jump right into it. Okay, so as you can see, I once again prepared a couple of different things that I want to talk about and that I want to use to structure the video a little bit. So I want to start with the tweet that I shared before Meta announced its quarterly results. And in it, I basically described that I wonder whether the market will ever learn that Zuckerberg is focused on the very long term, that he is willing to invest aggressively right now to improve the economic position of Meta in the long term, and to, of course, also improve the profitability and profits as a whole for Meta's business. Because the market seems to punish Meta stock whenever Zuckerberg and his executive team announce that they are going to continue to invest aggressively in the long-term position of Meta stock. And I wondered, well, Meta got particularly badly punished during 2020, where the stock was traded all the way down to $100 a share. And of course, there were other issues at hand, like the AT&T tracking rules by Apple, TikTok as a competition, and quite frankly, Zuckerberg was very focused on the metaverse, and investors didn't believe in that long-term vision. But to be fair, back then, they were also already quite aggressively investing into artificial intelligence. And as I just described, the stock got absolutely punished. And if we look at the stock performance now after the quarterly result, we can see that apparently, no, the market is not learning yet. Because, again, people were pretty optimistic about business, Meta as a business doing well. However, they were anticipating that Meta will likely continue to spend aggressively on CapEx, and that the market will dislike that. And that's basically what we were seeing after the quarterly results. So Meta stock as of today is down around 5.5% from its previous peak. It's trading at $560 a share. I think it once traded close to $600 a share. And of course, it's not a big move on a relative basis, but if you just think back to when Meta was trading at around $100 a share, a 40-point move would have represented a 40% decline. So I think it just helps to put the performance into context a little bit. So if we just actually look at the business results, so here you can see some of the key figures they reported in their quarterly results. So I highlighted a few things. Operating margin is trending upward to 43%. The number of ad impressions increased by 7%. The average price per ad increased by 11%. And overall revenue reached $40 billion, a little more US dollars in the quarter, an increase of 19% year over year. So overall, solid numbers. I think this was a very solid, if not a great quarter by Meta stock. But as I've just shown you, the market didn't like the numbers, or maybe also the guide and the comments that the executive team made during the conference call. And to be fair, the stock is obviously not as cheap as it used to be. Obviously, more growth and business performance is priced in, but I think the market is wrong in punishing Meta stock because, as I said earlier, ultimately I think the stock is heading to $1,000 a share. I'm pretty confident in that, and I want to talk about why that is in this video. So maybe before I get into the more bullish points, let me just show you that the media was once again all about, or the way the media reported about the quarter was all about, again, the aggressive capital expenditures of Meta on its data centers and AI ambitions, and also the ambitions in AR and VR. So as we can see here, Meta expects, quote unquote, significant acceleration in data center spend for 2025. And I think they didn't even guide specific numbers for the 2025 fiscal year yet. So we'll have to wait that until we actually get our hands on them in the next quarter. And just a quote here from Mark Zuckerberg from that very same article. So he's quoted saying, part of the formula around kind of building out the infrastructure is maybe not what investors want to hear in the near term, that we are growing that. But I just think that the opportunities here are really big. And then he continues, we're going to continue investing significantly in this. And I'm proud of the team that are doing the great work. that are doing great work to stand up a large amount of capacity. So that way we can deliver world-class models and a world-class product. So that's basically the whole clash you always have. Mark Zuckerberg being focused on 10 years out and the market and market participants being more focused on what's going to come in the next year or so. And just sort of to back up what was described in this article, this is an excerpt from the conference call. And again, this is Mark Zuckerberg, and here highlighted in green, to quote him here, we're training the Llama 4 model, so that's the new large language model Meta is working on right now. They're training them on a cluster that is bigger than 100,000 H100s, or bigger than anything that I've seen reported for what others are doing. So again, very aggressive infrastructure investment by Zuckerberg and his team. So what I'm describing in this tweet here is what I sort of already described in this video as well. So I believe the market is overly focused on the short term here, and I basically laid out that I think Meta will inevitably reach a price point of $1,000 per share in the medium term probably. And I think that stock performance will not be based on an expansion of the valuation multiple. I think Meta is now trading at a valuation multiple where you cannot bet on the multiple continuing to expand. Of course it could, but as an investor, that's not going to be part of my thesis. No, I think Meta is going to get to $1,000 a share by just continuing to improve its profits over time. Meta will continue to improve its free cash flow per share generation. Let me just show you this visualization I created the other day, which basically shows the performance of Meta over time. So in gray here, you can see, for example, the development of revenue, and I expect this line to continue to increase over time. And over here on the left-hand side, you also see in gray the development of free cash flow over time. So over the last 12 months, Meta actually generated more than $50 billion in free cash flow, which is absolutely staggering. If we look at the margin profile of Meta here, we can also see that as of the most recent quarter, Meta produced free cash flow margins of 33% and operating profit margins of 41%. And the core business of Meta actually produced, if I remember correctly, 53% operating profit margins, which is, of course, absolutely staggering. So I believe this trend will continue, and this will ultimately lift the share price over time. And I'm fairly confident that Meta will get to $1,000 a share. I don't know when, of course, but I think the business is basically running on full steam. They are moving first and quote-unquote breaking things to stay with the Meta motto in all sorts of areas. So not only in their core business, but also in different areas, which we'll talk about in just a second. So yeah, next up, I wanted to show you a clip from Gene Munster, who I think is an analyst who quite frequently also appears on CNBC. And he shared a little video clip on his X profile, in which he sort of summarized his take on the quarterly result. And I'm just going to show you the first minute of that clip. So let's have a look.
Welcome to Pressure Points. Our topic is Meta earnings. And as of this recording, which is an hour after the conference call ended, shares are down 3%, which are at their session lows. I think that the reason why they're down is essentially there's a high bar going into the quarter. That doesn't change. That the substance of what they're doing continues to be on track, which is aggressively pursue AI to try to find new ways to keep their business sustainable and new growth opportunities outside of what they're doing today. And so I'll jump into the pressure point. We've previewed this as well. This was all about top line growth. It came in slightly ahead of expectations for the September quarter, up 19% year over year. The street was at 18%. The all-important guidance, you have to look at the high end of their guidance range because typically that's where they come in, implies 20% year-over-year growth for December. And so we're essentially seeing a fractional acceleration in growth from the 19% in September to about 20% in December. One of the reasons that's happening is that their daily active users continues to grow. That creates more shots on goal, and also they're using more AI, better targeting to improve engagement and new tools for advertisers. So kind of the symphony of all.
All right, I'm going to stop here because we'll get to a few things he mentions there a little later. So basically what he's talking about, first of all, analyst expectations and how Meta was able to beat some of the expectations. Quite frankly, that is something that I don't really care about. I don't care about whether business is beating quote unquote expectations. I care about the business growing free cash flow per share over time. And if that involves beating analyst expectations, that is of course great, but it doesn't really matter to me. Then he also talked about guidance. So I just talked about the fact that Meta will only release their guidance for the next fiscal year in the next quarter, so we'll have to wait and see. But he talked about the guidance for the next quarter, and basically investors can expect an acceleration, a slight acceleration of revenue growth even in the next quarter. And if Meta can continue to grow that's what the point I tried to make in my tweet, can continue to grow its revenue and keep the margin steady at, say, a rate of 15% over the next 10 years. And I think that's doable. Despite Meta's size, investors are going to experience nice returns, probably a 15% return if the valuation multiple remains stable. All right, let me get back to my board here. So the other thing Gene Munster mentioned here is the growth of daily active users, and that is also something that I wanted to stress here. So I think this cannot be stressed enough because it's so impressive. So the daily average daily active users grew by 5%, which doesn't sound like much, but if you just consider that Meta now has 3.29 billion daily active users on the apps, like a growth of 5% represents growth of around 150 million users, which is pretty mind-blowing. Like, how many platforms even have users, like a user base above 100 million? Okay. What else do we have? I wanted to highlight a few things that will support the 15% growth assumption that I articulated just a second ago. So this is like a question or sort of a critical comment someone shared on Threads. So Chris wrote, "I'm still long Meta, but how many more ads can they possibly sell in the medium term? Threads is their only potential for more revenue, and while I'd love to see Orion go mainstream, I don't see how it takes over phones." So where I would strongly disagree with him is that Threads is the only means for growth for Meta going forward. And I sort of laid out some of the growth drivers for Meta's core business in my response to him. So I think ultimately, as an investor in Meta, you have to understand the key drivers for the business, the key performance indicators, and those are certainly the time spent on Meta properties. And I think, and I'll get to that again a little later, this is where you can already see a return on the AI investments by Meta. So by having better algorithms, smarter algorithms that show users content that is more relevant to them, they are going to spend more time on the platforms, which gives Meta the chance to show them more ads. Then, of course, they can continue to grow the number of ads slightly going forward, although I think Chris is right. There's a limit to that. And then they can, of course, also increase the ad efficiency. So that's another area where improvements in AI and targeting will yield an immediate return for Meta and also for its customers. So better ad efficiency will lead to better ad pricing, or Meta being able to charge advertisers higher prices for the ad offerings. Then we have the user base that might continue to grow, albeit at a slow rate, but there will be another lever. And then, as Chris highlighted, they might have opportunities to leverage their opportunities with Threads and also WhatsApp. And I think if you combine all of that, you can I don't want to say quite easily, but you can certainly get to 15% revenue growth for quite some time going forward. And then you, of course, have the optionality bets and the AI race, and also when it comes to Meta's devices, which we will shortly talk about. So just to support what I was saying here, I want to quote Susan Lee, who is the CFO of Meta, and what she said during the conference call. So I screenshotted a couple of excerpts here. So first she said, "Turning now to the business outlook, there are two primary factors that drive our revenue performance. First, our ability to deliver engaging experiences for our community." So this is what I described as Meta being able to show more relevant content to users, which will result in them being spending more time on the platform, and our effectiveness at monetizing that engagement over time. So that would be the ad efficiency. And then later in the call, she said, to start, we have been deploying these new architectures to our Facebook video ranking models, which has enabled us to deliver more relevant recommendations and unlock meaningful gains in watch time. Now we are exploring whether these new models can unlock similar improvements to recommendations on other services. After that, we will look to introduce cross-service data to these models so our systems can learn from what is interesting to someone on one surface of our apps and use it to improve their recommendations on another. This will take time to execute, and there are other explorations that we will pursue in parallel. But again, I think that is amazing. As a Meta shareholder, I love to read this. So Meta learning from, say, my engagement on Threads to show me more relevant ads on Instagram. That sounds like a smart move to make. And then she continued. Let me just make this a little larger here. Now to the second driver of our revenue performance, increasing monetization efficiency. There are two parts to this work. The first is optimizing the level of ads within organic engagement. We continue to see opportunities to grow ad supply. So this is what we also talked about. I think, and this is what Susan Lee here emphasizes as well, there is still room for growth in terms of the number of ads that users of Meta properties are seeing on lower monetizing surfaces like video. That's what she talks about here. So within Facebook, video engagement continues to shift to short form following the unification of our video player and so on and so forth. So let's skip to the last paragraph here. Across both Facebook and Instagram, we're also continuing our broader work to optimize when and where we should show ads within a person's session. This is enabling us to drive revenue and conversion growth without increasing the number of ads. And then lastly, I have one last clip here, or excerpt from Susan Lee, which, as I wrote here, can't see it now, which shows where the return on the whole CapEx spend actually comes in. So she said, the second part of improving monetization efficiency is enhancing marketing performance. Similar to organic content ranking, we are finding opportunities to achieve meaningful ads performance gains by adopting new approaches to modeling. For example, we recently deployed new learning and modeling techniques that enable our ad systems to consider the sequence of actions a person takes before and after seeing an ad. Previously, our ad system could only aggregate those actions together without mapping the sequence. This new approach allows our systems to better anticipate how our audience will respond to specific ads. And now that's the most important part here. Since we adopted the new models in the first half of this year, we've already seen a 2 to 4% increase in conversion based on testing within selected segments. So everyone, like back in 2022, when Meta was trading below $100 a share or in the $100 a share range, everyone was worried about Mark Zuckerberg going all in on the metaverse. But what I said many times on this YouTube channel as well is that Mark Zuckerberg has been quite vocal about the fact that the many billions the company was spending on the quote-unquote metaverse did not exclusively go to his VR ambitions. Now, quite a lot of that money also went into AI developments, and actually Meta has been developing AI capabilities going way back. I think they started working on it back in, I might be wrong here, but back in 2014, 15. So Meta is not new to AI, and we definitely see a return, like shareholders see a return on all of the AI investments by Meta improving the algorithms and also improving ad efficiency. Two more conference call highlights, which are more general comments, were made by Mark Zuckerberg, and I want to quickly read them to you as well. So first he said, first, it's clear that there are a lot of new opportunities to use new AI advances to accelerate our core business. This is basically what I just talked about. That should have strong ROI over the next few years. So he expects strong return on invested capital opportunities going forward as well. So I think we should invest more there. And second, our AI investments continue to require serious infrastructure, and I expect to continue investing significantly there too. We haven't decided on the final budget yet, but those are some of the directional trends that I'm seeing. And then the other highlight for me from Mark Zuckerberg was this part here. And I think this was basically the concluding part of his opening statement. So overall, this has been a good quarter. I'm pretty amped about all the work that we are doing right now. This may be the most dynamic moment that I've seen in our industry, and I'm focused on making sure that we build some awesome things So this is really what Mark Zuckerberg likes to do. If you have listened to the 6-hour-long acquired podcast on Meta's business and its history, what should have become clear is that Zuckerberg just likes to build things. So I'm sure that we build some awesome things and make the most of the opportunities ahead. And if we do this well, then the potential for Meta and, of course, Meta stock and everyone building with us will be massive. As always, I'm grateful for everyone who is on this journey with us, our teams, our partners, and our investors. All right. So let me wrap it up by talking about two more things. So if we go back to this response by me, here was primarily focusing on the core business. I think what makes Meta's business attractive right now is also the optionality Meta has both in AI, them building one of the leading AI models that is also in a way a bit counter-positioned by making it open source as opposed to OpenAI's models, for example. And of course, in devices. So during the most recent Meta Connect conference, Meta introduced the prototype of Orion, which you can see here, Marcus Brown wearing it. And Marcus Brown actually did a great video in which he compared Meta's current AR glasses, which are not publicly available, and he compared it to Snapchat's offering. And we're not going to watch the video in its entirety, but I just want to show you, I'm going to turn the sound off here, what the Snapchat glasses look like. And I encourage you to just watch this video after this video, because you will get a better sense of how superior Meta's AR glasses actually are compared to Snapchat's glasses. So this is basically what the glasses of Snapchat look like, and the glasses of Meta look way more appealing. In my opinion, and he's pretty hyped about it. Then you have the whole wristband technology that was developed by Meta, which is super impressive. So can only, as I said, where can we actually see an image of him wearing the glasses? There we go. So I can only encourage you to watch the video, form an opinion on it yourself. And lastly, what wasn't mentioned yet by me is also that Meta seems to be working on a search offering. So what many of you might already see in their Meta properties, in the EU we don't see it yet, are Meta AI, and using Meta AI to search for information, to generate images and stuff like that. And Meta, as the information reported, is apparently developing also AI search capabilities to compete with Google. So obviously, many people have tried to compete with Google, and no one was really successful. Not even Microsoft, who spent billions and billions on Bing. But I don't know. It's another shot on goal for Meta. I wouldn't want to make the success in this area part of my thesis, but I don't think the chance of them like disrupting Google here in the world of AI is zero. So I guess we'll have to wait and see. So let me know what you think of the video. Let me know what you think of Meta stock right now. Is it an attractive opportunity? Full disclosure, I'm an investor in Meta. I own like a good chunk of Meta stock. It's my largest position, but I'm not a buyer at these levels. I think returns from here can be good, but as Meta is already my biggest position, I don't want to increase my exposure even more. So that decision is mostly a decision I make in terms of risk management. Yeah, and that's it for today. I'll see you in one of my next videos. Take care.